10. So we continue with chapter 2 of technical analysis, and in this video we talk about this slide, chart types, and then some patterns with our Japanese candlestick. So you see these chart types a lot when you look at the website of Bloomberg and Wall Street Journal and all those things, and usually they make use of these chart types, but they are pretty much the same, right? So we have the line charts, bar charts, OHLC or the American candlestick. You see this in some websites, and we have the more famous Japanese candlestick, which will be our topic for today. So we'll talk about certain types and patterns, especially patterns of reversals. I think Japanese candlestick is very much known for that, and we'll talk about that at great length today. So without further ado, this is how the Japanese candlestick looks like. So it's either a white candle or a black candle. So some website has it as at green for instead of white, and then for black they will have red. So usually white candle is considered to be an up day. So a day where the market turned up. On the other hand, if it's a black candle, then it's a down day. So if it's an up day, so you start with this level. So this is the open, and then it closes because it goes up. It closes to this level with an intra high with these tails of the candle. So the tail up above is the intra high, while the tail below is the intra low. So we call that the lower shadow. This is the body, and then the upper shadow. So open, low, high, and then close. Right? So if it's a down day, we open here and then we close downward. We have an intra low, and then we have an intra high. So sometimes what happens is the market opens here, it goes up a bit, and then it goes down over here, but it closes a little higher before it finally closed for the day, right? So there are times wherein the candle has no lower shadow or upper shadow and it becomes a solid candle. So there are also meanings for that. So these are the candlestick types. We have short body. Usually this is a type of trading day wherein usually it's a thinly traded day. So you know the upper and the lower, the open and the close, is almost not far apart. We have here called spinning tops, look like tops, right? We have a long body, so usually if it's a green or a white candle, this is a nice day where it opens here and then closes all the way up, right? A long body which is down is a bad day, it's a bearish indicator. So if it opens uh, on a higher level and then closes down and the candle is long, then usually that spells trouble. We also have marubozu, it's a solid body wherein the open is the same as the low and then the close is the same as the high. So for both an up day or a bullish candle and then a bearish candle. So we also have several types of doji. Okay, we have many types of doji. We have long-legged doji, dragonfly doji, gravestone doji, four-price doji. So doji usually has the open and the close are the same, right? So in this doji, we open over here, and then we have an intra low, we have an intra high, but then it closes at the same level. So dragonfly doji has it open, it peaks, and then it closes at that level. and then there's a an intraday low, which is uh, indicated by the tail. Gravestone Doji, on the other hand, it opens down. It has an intra high, but then it closes again into the opening. A four price doji opens the lowest and then the highest level, and then the close are all the same. So usually that's an indicator of uncertainty in the market usually. So these are candlestick patterns. We have hammer with bullish engulfing. So this indicates that the market is going down, and then the hammer is seen, and then there is a bullish candle that engulfs the hammer, and then it usually turns up. So when you see this, usually it indicates that the market has turned and then goes up. Hanging man, on the other hand, is it is on an uptrend, and then you see the hanging man, and then it has a bearish engulfing over here on the other side, and then usually it turns down. Dark cloud cover, we'll talk about this in a little bit. So it's a bearish indicator, while piercing line is a bullish indicator. So usually this is on an upward trend, and then you see the dark candle covering the white candle, so sort of a dark cloud, and usually it closes usually the middle or even beyond the middle of the white candle. On the other hand, piercing line is on a bearish trend. It goes down, but then it gets stopped with this piercing line bullish candle. So it goes below, it opens lower than the close of the previous day, and then it turns up to more than the half of the candle, or towards the half of the candle immediately preceding it. So it indicates that the market is on a reversal, and then it goes up again. So these are just some of the patterns of the Japanese candle doji. This is a session open and close. So yeah, we talked about that. Usually it indicates uncertainty in the market. Okay, we talked about that. Reversal patterns. These are reversal patterns. Okay, so we have here, I think this is ExxonMobil. So can you spot the doji? Okay, there are many dojis, but usually I'm talking about this one, right? So it's on an uptrend, and then this turns up, and then it goes down again. Actually, there are also other dojis, but then we usually look at that and see usually either at the peak or at the throw of the chart or the curve, then we see the reversal coming up. Okay, spot the doji again for the GBP USD. So this is a currency pair, right? Okay, where's the doji? There's the doji, right? There's the doji. Doji is a green candle. Usually this is what I use in my forex trading, right? So it's usually on an uptrend, and then you see that doji, and to top it all, it's placed beyond the upper band of the Bollinger, and the Bollinger is on the breakout stage because it is widening. So we'll learn about that later on. Okay, so that's the doji. There are certain other things here. This is called the counter attack line. So bullish, this is a bullish candle. It is going down, and then there's a counter attack line. Usually either a solid candle or a candle, a white candle with tails. A bearish candle, counter attack lines is usually it's on an uptrend, and then there's a bearish candle, counter attacks the previous bullishness of the market. So this pattern is called dark cloud cover. Usually it's an ominous sign. Okay, dark cloud cover is a bearish reversal signal in an uptrend. It is a long white candlestick is followed by a black candlestick that opens above the prior white candlestick's high. So usually in this case, so it's on an uptrend, and then it opens above the high, but then it closes below the closing line of the previous day. So that's an ominous sign, dark cloud cover. So engulfing patterns, there's a bullish and bearish engulfing pattern. Usually, the bullish engulfing pattern is comprised of a large white candle which engulfs a small black candle in a downtrend. So that one on the left is the engulfing pattern, right? So in a way, on the right side, it's an engulfing pattern. This one, but it's bearish engulfing pattern. So usually, it's just that the next candle engulfs the previous candle, right? So this is called, the next one is called the Doji Star. So on an uptrend comes a doji, on a downtrend there's a doji. Usually it's called a reversal pattern. Doji Star, that usually happens when the trend is coming to an end, right? So remember the mantra in in the technical analysis, the trend is your friend until it ends. All right, so remember that. Do you believe in that saying? So leave your comment in the section below if you believe in that saying. Okay, and which of the pattern that I've shown you is your favorite? For me, it's usually the doji, right? So the doji is always easy to spot, and it usually tells you that the trend is already about to end. So this is an evening star. Look at this. So usually it's an ominous sign in a top reversal. An evening star is usually on an uptrend. There's a usually has a gap from the previous close, and then usually it's just a small candle compared to the previous candle. So it's usually like a thinly traded day, and then the next day it opens below the close, and then it closes on a downtrend. When that happens, it's an ominous sign. It's called an evening star. Usually it's a major reversal, and usually the stock market turns down. All right, so that's all for now. This is the explanation of the evening star. You can just read through it during your spare time. So that's all for now. We continue next on some chart patterns, some more chart patterns, and retracements examples in the next video of technical analysis. Thank you very much. See you next time.